Hey, Elgin Walker here from Keller Williams VIP Properties. I want to talk to you a little bit about the loan modification game. And that's what I'm calling it right now, the loan modification game. Well, the environment has changed overall for loan modifications. And I'll tell you, for the most part, from what I've seen and experienced, it's actually changed for the better. But there are definitely some things that have changed and some things you should be aware of. The first one is previously, you could kind of drag loan mods out, at least some people were doing, and it seemed like they were taking a year, 2 years, and some people aren't making their payments, some are, but whatever the case, could drag into a longer period of time before any decision was even being made. I'm starting to see that the loan modifications are being sped up to where there's an answer, but when they're sped up, depending upon whether you're making your payment or not making your payment, you are being moved and accelerated to the next level. Next level meaning the possibility of a short sale, possibility of you bringing your payment 100% current, or them moving you toward the foreclosure procedure. Banks appear, for the most part, to be trying to speed that procedure up. I'll also say that I have seen from some family members in particular that with the loan mods now, in most cases, you're being approved for them, but then you're being put on a trial period. That trial period is about 3 or 4 months of making a consistent payment. After that is finished, then you will receive your permanent modification in the mail, signed, etc., etc. Life is all good. Now, I will tell you there are some instances where it's not all good. And yes, I'm going to put Wells Fargo on blast in particular because I'm so surprised at what I've just seen Wells Fargo do. And you should be aware of this. Be aware of this for whatever your circumstances are. Have a client that was never late on their mortgage. Never late on their mortgage. I've been going through the loan modification process because of the type of loan they were in was an interest-only loan that was going to be expiring soon. Been in that modification process over 1 year. Was verbally given terms of what that modification would be, which was great, and was sent out the trial payments for them to make for the 3 months, 4 months, before it turned into a permanent modification. Well, at the end of that modification, Wells Fargo completely changed the terms of what they verbally said they would do. In addition to that, this person who has been making their trial payment because that's what they were told to do and made the exact payment they were told to make was actually given lates on their credit report because they were not making the same amount that was their original note. So how crazy is that? So now this person has mortgage lates, which does not put her in position, he or she in position, to be able to either purchase a home, refinance the existing property, because now you've got mortgage rates showing on your credit. Be careful what you're doing with your loan modifications. Make sure that when you enter into the agreements, that it's something that you can afford, something that you can hang with. If not, look at some of your other alternatives. If you'd like more information about the loan modification situations, preventative foreclosure message, alternative foreclosure things that you can do, give us a call. Hope this helps somebody. And remember, no matter what you're going through in life, it truly is a great life. God bless.